Good.
Welcome to Ecosummit.
Thanks. Thanks for having me. It's my pleasure. My second time at Ecosummit after being in London. First time, and I guess it's very good to be in Berlin. This very good vibe here in the crowd and in the city. Now, Jan asked me to discuss today about disruptive innovation and the consequences of early-stage companies to focus on disrupting a market. But let's say, very happy to do that. But first things first, a little bit about Aster for those that do not know us. So we started as a corporate VC arm of Schneider Electric, a company that should be known to most of you. About 15 years ago, invested in a few companies, both in Europe and United States. And then in 2010, we basically took the company out, so did a management buyout. That allowed us to basically improve the governance of the fund, be able to raise a larger fund, so we integrated the different corporates and also financial LPs, be able then to build a stronger team, a stronger portfolio, eventually a stronger franchise. Now, today we are spread out really globally, I would say, with main focus on the European market, on European opportunities, strong presence in San Francisco, and a lighter presence in key geographies elsewhere, Tel Aviv for Israel, Beijing for China, and Africa. So really, if you guys, entrepreneurs, CEOs, are really truly ambitious for global expansion, a global footprint, you really need to talk to us. Now, going to basically disruptive innovation, we heard actually this word many times yesterday, maybe less so today, but in general we hear very, very much in our daily life. So I thought myself, let's think back what it is. And there are plenty of theories about disruptive innovation, but first and foremost, disruptive innovation is a process. So it's a process that entails a new entrant. Here it's like the red arrow on the bottom of the slide. It really gets into a market and can do many things, but what is most important is to really focus on underserved niches. So areas of the market, sometimes it's long tail, sometimes it's really like type of customers that are underserved, not, let's say overlooked by incumbents. So why this is important? Because you, as an early-stage company, cannot dare to, let's say, compete head-to-head to incumbents. Anyway, it's not really smart at the end of the day because they play with much more resources. So what makes more sense is to get the product in the market, have customer validation, even though the product is not like a perfect one, and then by time to time you learn about the customer, you learn about the market, you learn about the features you need to improve in your product. And then, especially if the incumbents are not capable to keep up good work on pushing the boundaries and improve also their offer, at some point, the new entrants can disrupt the market, can really get to the most valuable part of the market, the most high profitable customers, is there really where disruption happens. Now, if we think about examples of disruptive innovation in the past, Google search was clearly one great example of that. If you guys remember, at the beginning it was very uncommon to go to internet and look for information. We were going to libraries, books, and so on. And the product, Google search, was not really optimal at all. But it was really appealing for a niche of people, the geeks, the people that were accessing to personal computers. And then, the history then is quite clear. Another product that was really disrupting a given market was the iPhone, not because of the improved features of the phone, the smartphone, versus the other competitors' smartphones, but more because enabled personal users and professional users to take capabilities of computing on mobility. And what the personal computer industry missed at the launch of the iPhone was really that mobility was becoming an important feature of personal computing. And that, to the way that we all know today, that probably happened to me yesterday, taking all notes of Ecosummit presentations with my iPhone, not with a paper or with my computer. Great example of disruption, Airbnb. of course, is not targeting the most affluent part of the travelers, ourselves, the business users, at least at the beginning, but then improved that, and today the whole hotel industry is really frightening because these guys are really targeting also business users. Netflix, at the beginning, you guys remember Netflix was very complicated to get. You had to receive DVDs over the post. DVDs were not arriving, were arriving late. Then everybody knows what happened to Blockbuster. Now, even today, broadcasters are really being threatened by Netflix. Last example I wanted to mention is Uber. Uber is a little bit controversial because it's not really following the given traditional path of disruptive innovation. For instance, doesn't really have features that some typical business users would like to have, like reserving in advance. They could do definitely, but it would miss probably some of the also truly innovative features of Uber. So for the time being, people are a little bit debating whether this is disrupting innovation or not. For sure, this is disrupting a market, which is different stuff. Now, what is important is also to think about our space. So what do we think about disruptive innovation in energy and sustainability? Now, just so for full disclosure, I'm not an investor in this company that presented yesterday. I think Sonnen is really following a path of disruptive innovation. Why? Because started in Germany a few years ago, targeting a specific market segment that was somehow overlooked by utilities, and with a not perfect product at the beginning, but improving little by little. Now is really taking a really threatening path if especially utilities incumbents are not responding adequately. So in my view, these guys are really placed in the right position. A few companies in our portfolio, we really think we can, for some specific deals, bet on disruptive innovation. One is, in our view, Cosmo. You heard them before. They could really disrupt the way we think about investing and maintaining complex infrastructure. Another company I'm really excited about, we have in our portfolio, is Isotope, really disrupting the way we think about data center infrastructure, data center cooling, through a solution that is fully 100% fluid, liquid, that today is targeting a niche, as per the theory of disruptive innovation, high-performing computing, but little by little taking pace and space in the larger data center market. And lastly, Avantium, a company based in Holland, in our portfolio. And these guys are trying to rethink or anyway disrupt the market of packaging through 100% bio-based plastic. And a great example is the partnership signed with Coca-Cola. Now, what does it mean then invest in disruptive innovation? Disruptive innovation, as we said, is a process, but what happens through this process? This process can take time. And you guys know this curve is not a Gartner curve, but it's more kind of the curve that every startup more or less follows. There is a kind of excitement at the beginning. There's maybe research leading to launching a product. And then there's kind of disillusion. Why? Because from early commercialization to really successful commercialization, sometimes it takes time, sometimes it takes years. And sometimes we find, especially in our space, in the energy space, that it's really complicated to sell to customers, really complicated to serve customers, also because customers sometimes are in next or quasi-monopolistic situations. So it takes time, but the light is maybe out of the tunnel if you're able then to improve the feature of product and make sure that the product then is successful, then tweak the business, make sure that selling this product is through a business model that is earning money, and therefore when the business is successful, that you out of the path of this called that valley. Now, as I said, this is taking time. Therefore, in order not to lose any opportunity to really disrupt the market, you really need to make sure that you don't get out of money at some point. It might happen, and it's not the end of the world, but can really be painful for founders, can really be painful for management teams, and sometimes it's also life-threatening for the startups. So what should we do here? We really need to plan wisely about cash management, about spending, especially now this period is kind of actual because after last year where there was a little bit more spending spree, now we're back to reality. The market is quite more complicated, especially in Europe, to raise funding. But my advice is that raising let's say, just what you need, or maybe a little bit more, it's great. It's actually what you have to do, because it's what makes sense to really keep the company focused. Now, money is not everything. You guys should look for smart investors, investors that really want to spend time with you, really want to help you at the board level. Is where things get decided. It's where complicated things get clarified and simplified. And so, therefore, look for complementarity. Look for people that can add complementarity to your board. Last but not least, smart investors really truly believe that passion is really a key value. What is important is to share a plan made of milestones that make sure that the company is building value over time. Then if a milestone is missed by certain months, it's not like a certain number of months, it's not like the end of the world. But it's important to keep track of the progress, keep track of the value creation. That's very important to us. Then, of course, we are sometimes labeled as very greedy. It might happen, but in fact, we truly believe, at Aster at least, that in order to make a successful venture, you need to incentivize really well the team. The founders need to have a stake. The CEO need to have a stake. The first line to the CEO need to have a stake. And that's really the only way to really make a successful venture. So if you guys are truly ambitious, if you really believe in what you do, you probably should talk to us, because we have the right franchise and platform to help you make this dream happen. Thanks a lot.